We are back here on the floor of the New York Stock Exchange. Right behind me, actually, you can see the flag and everyone getting ready to be ringing the opening bells. That is going to happen in just about a minute and a half time. Now, it's going to be a big Friday. We have been talking about a lot of stories. We had mixed economic data. We just got some much better than expected data on industrial output. That, of course, could be significant, 5 times better than what economists have been looking to see. But we also are going to have a lot of volatility. We've been talking about quadruple witching. Sounds evil, but really it's just the expiration of index and stock options and futures. And in addition, we haven't been talking about this, but at the end of the trading day today, we are going to get the so-called rebalance for both the NASDAQ and the S&P, the NASDAQ 100. So that's also going to be adding to the volatility in today's session. Now, one other thing I wanted to mention, we have seen commodity prices turn a little bit to the downside, copper included in that. But earlier today, the headline on copper was an interesting one. Copper actually topping $3 for the first time this year, actually an 8-month high. This was out of some important headlines out of the country that has started all of this volatility and imbroglio in the markets. That, of course, China. We got a lot stronger than expected economic data on growth out of China at the same time that we had data saying that they were producing less of copper than people had been expecting. That's important for the commodities markets, especially as you look at the trade there. We did see a bit of a decline in China overnight. We also saw a bit of a decline in Indian equities overnight. We do have the bells just getting ready to ring in just about 10 seconds time. Keep in mind, I want to let everyone know where we're seeing the Japanese yen trade. It's at 116.98. That is a good thing, at least if you're looking for a bullish day for U.S. stocks. And there you hear the opening bells here on Wall Street. We've got Gafisa SAA, leading Brazilian home building company. They are the ones that have been hosting this band outside that's been pounding since 7 o'clock this morning. At the NASDAQ, Terrence Adderley, chairman of Kelly Services. And at the Amex Grand Marshal for the 246th New York City St. Patrick's Day Parade. And now let's go to David Faber. We've got breaking news. David.
Thank you, Aaron. Yeah, an important story, I think, this morning for many people. The Blackstone Group is deep into preparations for an initial public offering that could be filed for in the next 2 weeks, according to people familiar with its plans. Goldman Sachs, in conjunction with Blackstone's lawyers, are currently writing a prospectus for the offering, and Blackstone has been sounding out its limited partners, the institutions that provide the equity for its deals, about whether they would object to such a move. While a final decision on whether to go public has technically not been made and rests squarely with the firm's chairman, Stephen Schwarzman, people familiar with Blackstone's plans tell me the decision has been all but made, and the filing will soon follow. Mr. Schwarzman has not returned calls this morning. A Blackstone spokesman declined to comment. The irony that the firm, which has taken some of the nation's largest companies private, will itself become public is not lost on Blackstone's principals. Mr. Schwarzman himself has on many occasions explained why companies prefer to go private rather than stay public, as he did in a recent interview with Maria Bartiromo.
There's a structural issue with public companies today where there are certain things that they're not able to do that private companies can do, and that arbitrage.
We're hearing by the end of March. Back to you.
David, it's an amazing story, and I am chuckling here because I'm thinking about maybe if KKR can get their papers together and try to beat Steve Schwarzman to the punch on this. But a question for you. You talk about Apollo, KKR, and Carlyle also potentially considering an IPO. Do you expect to see a lot more of the private equity firms going that way before more hedge funds? Because obviously there was a great brouhaha about the Fortress hedge fund IPO that surged 70% on the first day here at the big board.
Yeah, I mean, there on both sides. You know, there is no shortage of bankers calling on all the large hedge funds that have a somewhat institutionalized business, or can at least make that argument, Aaron. No doubt about it. And many of them are looking for opportunities to monetize. You know, if you're Steve Schwarzman or if you run a large hedge fund, you've created all this value, but at the end of the day, if you don't take it public, you walk away. Now, you've already made so much money, it's hard to imagine you could ever find a way to spend it. But nonetheless, you hate to leave that money on the table. That's what's going on here. Private equity is all about the money, and so is taking these firms public. So hedge funds, yes, and private equity. Carlyle, by the way, in the midst of raising new money, so that may be a while. But again, from what I'm hearing, it is going to be a potential feeding frenzy.
Wow. All right. David Faber, thanks very much. David Faber breaking the Blackstone story right here on Cnbc. Let's go to our market reporters now standing by with all the stock names to watch on this quadruple witching Friday. Mr. Pisani.
Hello, dear. And I'll tell you what's interesting. First of all, here's Gavisa. This is the publicly traded home builder. Just went public down here. Brazilian home builder focusing on middle and upper income homes throughout Brazil, founded in 1954, and we're waiting for the CEO who's down here to make the first trade on that. Industrial output was terrific this morning and was a very big factor for the market overall. Much stronger than anticipated. Remember, we've had these regional manufacturing reports like Philly and New York that have been weaker, so that's definitely helped the market here. Two topics, the quadruple witching expiration, and remember, we were a bit positive as we were going into the open. That expiration, the key point is that the settlement is the open on the S&P 500, a little bit weaker since that open here. We'll see how it holds now that we don't have that quadruple witching expiration support. We'll see how the market holds up here. Also of interest here is that S&P reweighting that we talked about earlier, and that will be at later in the day. I'll give you a little bit more information. The core CPI was in line with expectations. That was a relief to the bond market, but food prices up 0.8% are a big topic down there. Stocks that are moving, Aero Postal beat by a very small margin. They gave guidance right in the middle of the range. That's good news. The retailers have been weak recently. Ann Taylor gave even better news. They also beat and gave guidance for a full year, a bit above expectations. Fourth quarter, same-store sales fell about 6%, but Ann Taylor's up 4% right now. Finally, Hewlett-Packard right over there, $8 billion stock repurchase program. That's a little less than 8% of the stock outstanding. Let's go over to Scott Wapner standing by over at the NASDAQ.
All right, Bob, thanks so much. Bouncing around a little bit off the open right now. We've got to the downside about 5 1/3 points. Let me start by talking about accredited home lenders, something I've talked about a lot this week. But take a look at the stock off the open this morning, up 30%. It says it's reached a deal to sell $2.7 billion in its loans at a substantial discount to relieve some of that margin pressure that the company was facing. This stock closed below $4 on Tuesday of this week. Quite a comeback. Right now, $12.50. Don't normally talk about micro-cap stocks, but I wanted to touch on a couple of pharma stocks that Mike Huckman's been talking about throughout the morning because it's a very interesting story. We're looking at Hollis Eden here is up 9%. Take a look at a board here of a couple of pharma stocks that are making some interesting news this morning. Hollis is trading to the up. Actually, Hollis surprisingly is up now, but this was a stock that was down for much of the morning. Cleveland Biolabs was trading in the opposite direction. Hollis Eden was scrapping development of its nuclear radiation sickness antidote because the government said it wasn't going to buy any, and that drug was considered the front runner. Cleveland Biolabs there on the bottom was the only other company in that space. Interesting that Hollis Eden is now to the upside by some 8 3/4%. Let me touch on Pacific Sunwear. It is also to the upside 2.5% today, upgraded to a buy over at Roth Capital. The target is $18. Bank of America also positive on that stock. Finally, Starbucks, 2% to the upside. FBR saying there's an overreaction to Howard Schultz's memo, a warning of threats to the brand. Goldman also adding the company to its conviction buy list. So interesting news for Starbucks there, has that trading to the upside. Let's go to Rebecca Jarvis at the NYMEX.
Thank you, Scott. Well, a couple of factors in focus here this morning with crude trading up just slightly. First of all, OPEC, they held steady at their meeting yesterday in Vienna. That's what we expected, but that's a factor where the river is sometimes green, but Rick Santelli is always on point. Rick?
Hey, they don't need to dye the river green in Chicago, even though they do. Think about that. Listen, I'm telling you, there's things that are changing rapidly. You know that relationship of a lower dollar versus the yen? You know that relationship of stocks and fixed income? It's on the move. Interest rates are higher. The new fear gauge we talk about on...
All right, thanks very much to Bob O'Brien. You know, have camera turn around and look over at that feast over there. There's a feast. I don't know who's feasting, but I know, Mark Haynes, if you're watching, you might have wished you weren't sick today because there's extra Danishes left. On that note, we're going to take a break. When we come back, Christopher Zook's going to be with us. He is the Chairman and Chief Investment Officer of CAC Investments. He says investors' complete lack of respect for risk will push stock prices even lower. Plus, our final segment to help out our boy, Chris Moneymaker. Hold it or fold it.
Know when to fold up, know when to walk away, know when to run. You never count your money when you...